Hi, everyone. My name is Grahame Roberts, VP Regional Sales with NCM Investments. Thank you for joining in today. I'm in my basement, aka Sales Central. If I turned the camera around, you'd see kids' toys and a spin bike. But that's not what we're here to talk about today. I have with me Phil Diorio, lead portfolio manager of the NCM Core Global Fund and Core American Fund. Phil, thank you very much for being here today.
Thank you for having me.
Okay, great. I have 3 or 4 questions here that a lot of advisors have been asking me to ask you as I've been talking to them over the last few days. Lots of uncertainty, but before that, we'll just get into the first question here. Phil, you've been managing money for over 20 years. What are some of the lessons that you have learned, and how do those lessons impact how you invest today?
Yeah, so throughout my career, one thing I appreciate is the ebbs and the flows, the lows of the cycle. As everyone knows, no two cycles are ever the same, but there are certain things that repeat over time. And one part of that is the emotional side of investing, or people call that investor psychology or behavioral finance. And when things are really good, the market can just keep going higher and higher and just keep surprising people. And conversely, when you get into tough times, the markets can go a lot lower than what people would think, because it's a bit of a herd mentality. And I think that's one of the things that I've come to appreciate. And 2020 is a really good textbook case of what can happen with the emotional side of investing. When the coronavirus started to get a lot of press earlier in the year, we saw the markets start to go into free fall, and the S&P 500, which is a leading index in the U.S., fell about 34% in about a month time. So that's a really big fall. And then after we bottomed in March, the market had a run of about 60% back to the upside. And so to have that happen in 1 year is very remarkable. And I think the key, going back to what I said about the emotional side of investing, is to make sure that you don't get drawn into that. And so what you have to do is, when you get into a really tough market, and I've seen a few of those, and the aftermath of the tech meltdown, and what happened after 9/11, after the great financial crisis, and a few years in between now and then with COVID, markets can get hit very hard. And if you're watching CNBC or listening to what's being said on Wall Street and Bay Street too much, you can get convinced that the right thing to do is to sell at the exact wrong time. And so, March was a good example. The mood changed very quickly from optimism to pessimism. And I had to block it out. There was a lot of noise, and I knew that when the market falls this far in such a short period of time, especially with what had happened, this was not a bursting of a bubble like we saw in 08-09. This was a virus that came out of nowhere. We went into this with the consumer in pretty good shape, the banking system at healthy capital levels. When you look back in history, in these types of downturns, the recovery doesn't take as long. So I viewed it as a buying opportunity, and we made changes at that time. And conversely, now we've had this really big move back up to the upside, and now the key is to not get complacent and just make sure that what I'm doing in the portfolio makes sense.
Okay, great. Thank you, Phil. Second questions here. Obviously, fair to say 2020 is far from normal. With all the volatility that's happened in the past year, what are some of the highlights that you're looking at and wanted to share?
Yeah. I think for me, and I might be, building a little bit on the previous question, but it's always been about the process for me. Got a very, regimented way of building a portfolio, carrying out lots of research, doing my due diligence on companies, trying to find the best companies in the world, and then only acting on those ideas when I think they're trading at attractive valuations. And so with the kind of year that we've had, the volatility has been incredible. It's been all over the place. Sticking to the discipline, sticking to the process, to me, that has been a key driver, and just sticking to that plan.
Okay, great, thank you. What sector or geographic area are you looking at going forward? Maybe you could just quickly talk to that, and how you set up the maybe Core Global Fund in particular, just quickly from a geographic standpoint.
Yep. So right now, the portfolio is invested throughout different parts of the world. We're in the US in a pretty big way, but we're also in Europe, and we're also in Asia and emerging markets. And at this point, we're finding ideas in all three areas. The thing with the US is they just have more of those best of breed companies that we're looking for. It's a really great hunting ground when you're trying to find the best blue chip companies in the world. So, we've got about 60% of the portfolio in US companies. In US companies could move higher from here. But right now, we're finding ideas in all regions around the world. And that's, we look in all regions in the world. And in terms of sectors, I've said in these podcasts and videocasts before that, technology and healthcare are two sectors that we like for, the medium and the long term. In terms of what we're looking at now, when we come up with new ideas, I'm actually finding more ideas in the industrial consumer area, and I think that there's going to be some good, I guess, performing companies in those sectors when we get through this election and we get to the other side and we get closer to having a vaccine and the economies open back up. I think consumer discretionary and the industrials are areas that are going to perform well, and the valuations in those areas are also attractive for some of the ideas that we've been looking at. So that's kind of the latest hunting ground, so to speak.
Okay, thanks, Phil. That's great. Yeah, I know you have a lot of high quality tech and healthcare names in there, and they're there for the long run, and they've done well for you. But thank you for sharing with the audience the fact that you're looking at other areas that might be more undervalued as a bit of a catch-up trade after the election. So that's good to hear, and look for information on that from Phil going forward on his Friday notes around changes if need be made to the portfolio. Last question, Phil. Thanks again for your time. Maybe just one offensive name and one defensive name in the portfolio, the Core Global, right now. Thanks.
Sure. Well, let's start off with the offense. So one name that we've held for quite some time is actually based in Asia, Alibaba, which is a it's a technology name, and I would say that it's very similar to Amazon. They have a lot of technology. There's a good exposure to the cloud, and then there's also a very, very large retail business, tilted towards e-commerce. And then they also have a payment business called Ant Financial, and they're actually in the very late stages of doing an IPO for Ant Financial. So this is a name that we like a lot. It is in many ways similar to Amazon. One of the big differences is that Amazon trades at a forward price to earnings ratio of close to 100 times, and Alibaba trades at a little less than 30 times. So I feel that we're able to buy a very comparable type business that's exposed to some of the same trends at a much more attractive price. So that's why we like Alibaba. And then in terms of a defensive name, I'm going to talk about a name that's based out of Switzerland. The name of the company is called Javon. I don't even know if I'm pronouncing that right. I've heard it pronounced a few different ways. And Javon's actually classified as a material company in the material sector, which is not traditionally where you go hunting for a defensive idea. But Javon basically is the leading flavor and ingredients company in the world. And what they do is they supply ingredients to food, beverage, household and personal care companies, cosmetics and makeup. And so really, you can almost look at this company as a quasi-consumer staple company because the vast majority of their sales are made to consumer staple companies, which are known as a lot less cyclical, steady Eddie type companies. And so what's neat about Javon is that what they provide to their customers, which are these flavors and ingredients, are very, very important when consumers make decisions. So the taste and the smell of food and drinks and makeup and cosmetics and fragrances is actually very, very important when it comes to the consumer purchasing decision, more important than the price. Yet the cost of these ingredients are very, very small in the grand scheme of all the costs that go into making and distributing, manufacturing, and marketing products. So they play a really, really important role, but the cost of their product is very small to the likes of a Coca-Cola or a Procter & Gamble. And it's also a fragmented industry. So Javon has done a very good job of building their business organically, but they've also been consolidating within the industry. And we're in this environment now where people are trying to control how much sugar. They want less sugar, they want less salt, they want less fat. If you didn't have a company like Javon, food and drinks wouldn't taste very good. And that's exactly what these guys do, is they make all the food and the drinks that we eat and have every day taste better. So it's a really neat company. They generate really attractive returns on capital. They generate a lot of cash, and most importantly, they have a management team that can allocate that cash in an effective manner. So that's why we like Javon.
Okay, I love it. Thanks, Phil. Offensive name and a defensive name there. That's great. The Core Global Fund, we call it a smooth and steady ride, and it is very strong performance, but not with a lot of volatility. And I think that's summed up in the way that Phil sets up the portfolio, looks for ideas, and allocates accordingly. So yes, an allocation to the US, of course, in the strong sectors, but also to other areas like Europe and Asia. Unique names there that I bet aren't in a lot of portfolios. Again, we want to differentiate ourselves here at NCM. So Phil, thank you very much for your time. And everyone, please look out for updates from Phil on the Core Global Fund through his Friday notes. We appreciate your time. If you have any questions, please reach out to your regional wholesaler or email sales@ncminvestments.com. Phil, thank you very much for your time today. Thank you, everybody.
Thank you, Graham. Appreciate it.